off.
Okay.
Oh, why? What the?
So it's the problem. The problem is this is the problem.
Uh, maybe it is this 这个
Okay.
问题。
Okay.
You can.
Okay. So this is okay. Okay. 小心点. All right, and we are back. Welcome back, ladies and gentlemen, to the fun channel where we talk about everything U.S. markets, U.S. headlines, and we're also going to get into some of the, for example, some of the technical analysis. We'll talk about some chart patterns. We'll talk about some indicators. We'll also do some fundamentals, and we'll talk about the headlines. So everything U.S. markets. Let's make it fun. Let's go. So one of the headlines that we'll talk about today is how IBM is not doing so well right now since 2000, and we'll also talk a little bit about how Amazon is spending $12 billion in Louisiana on data centers. We'll show you some pictures of these massive things. My God, look at that! And then down here, it's boom, 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 and then also how Trump wants to the executives to cover the data center costs. I'll talk a little bit about SpaceX and their IPO and some of the things going on with Tesla. We'll talk about that as well. And then we'll get into some of the things like here we've got them talking about Amazon laying off 16,000 employees because that goes up with this one, how AI robots may outnumber workers in a few decades as firms ramp up investment. So all that coming up. So let's get right into it, shall we? Yeah. So here's the one. International Business Machines, known as IBM, had their worst day in more than 25 years after Anthropic said can help modernize COBOL, a data programming language that's run on IBM computers. Yeah, COBOL is a very old language, and apparently it's run on IBM computers. And Anthropic said its tool can help modernize COBOL. So the stock plunged 13% in the biggest single day percentage loss since October 2000. Let's check that out. IBM. Yeah, was not a very good day for for IBM. It did go. Let me see. Where's the number that I'm looking for? Oh yeah, here. From here down to here, yeah, 29, 30%. So yeah, 13%, 13%. So yeah, it's the biggest 13% biggest single day percentage loss since October 2000. The decline, IBM shares have fallen 27% in February, on track for the biggest 1 month slide since at least 1968. So that's a big one right there. Modernizing a COBOL system once required armies of consultants spending years of mapping workflows. Anthropic wrote in a blog post, tools like Claude Code can automate the exploration and analysis phases that consume most of the effort in COBOL modernization. And IBM defended the company's prospects, saying its core mainframe computer system offers a platform that provides the same quality of performance and security for various programming languages and not just COBOL. So that's interesting. The value IBM mainframe delivers has nothing to do with COBOL. Whether application is written in COBOL, Java, or any other language, the language is not a source of that value. The platform is. So, most of the mainframe computers that run COBOL are made by IBM, and the sell-off made the company the latest to see heavy pressure on the fear that artificial intelligence will weigh on the growth prospects of legacy companies. Yes. So a significant chunk of IBM's revenue remains tied to its mainframe business. These massive customer-owned servers run some applications on COBOL, a coding language that's older than those now common in the rest of technology industry. Mainframes are still purchased by customers with high reliability needs, such as those in finance or government. Yes. On Friday, Anthropic introduced a new security feature into its Claude AI model, spurring widespread selling of cybersecurity stocks. Software stocks have been broadly weaker this year on concerns over AI-related disruption. A major software ETF is down 27% this year, on track for its biggest one-quarter drop since the financial crisis in 2008. Yeah, much of the selling has come on new AI tools released by companies like Anthropic and Alphabet. Investors are fretting that the ability to vibe code, use AI to write software code, will let users create their own applications, which will diminish demand for legacy products and weigh on companies' growth margins. Yeah, that's true. While we understand why mainframe migration could be a perceived negative for IBM, we would point out that IBM has already provided customers with several modernization options. Yeah, there's that. So, having shown you that, let's take a look here at IBM. All right, looking here on Trading View. Let's go right over here. Okay, so here's looking at IBM. Let's put this to 1 minute so we can see the patterns a little bit better. Actually, I'll put this on 1 day, 1 hour. Yeah, let's try 1 day. There, so we can see the patterns. Yeah, so basically what I first want to show you here is some of the indicators. For example, right here, this is the RSI. Our RSI has the high and the low. So for example, what I want to show you here, this is the relative strength index. That's known as the RSI. And right here, this is, for example, this is the 70 line. This is getting, what you might think of as overbought area. And then this is the 30 line. This is kind of the oversold area. But, yes, but it can be oversold or overbought for a long time. Before ever market corrects. So just because it goes overbought or oversold doesn't mean it's going to market correct right away. But yeah, so that's that. And now what can we look at? What can we see from the RSI? Let me show you this. So for example, right here, how you see, boom, it's very, very oversold right now. It's sitting here at 23. And just because it's oversold does not mean it's going to market correct. But it just gives you an idea that maybe it could in the future. But it can stay oversold for a long, long time. It's just something to be aware of. Now, this is what they're talking about. Look at this this chart pattern up here. Look at this. This thing just dropped like a rock right there. So that's the RSI. Now, what about here, let me show you this right here. This is the MACD. This is the moving average convergence divergence. And basically what you want to know is, for example, when the blue MACD line crosses the red signal line. So for example, that's what you want to keep in mind. And when it crosses going up, if it crosses going up, like right here, see the blue line crosses the red signal line going up, you're going to see right here, that's why the price goes up, right? And then when it crosses, like right here, it crosses. Where is it? Oh yeah, right here. It crosses right here. It crosses going down, so you see the downward pattern there, right? Yeah. So bear that in mind. That's basically the main idea behind that. Now let's look at some chart patterns. Let's see if I can give you some chart patterns here. Right here, you see. Here's one bottom. Here's another bottom. Then here's the neckline. Okay. So let me give you that. Bum, bum, bum. Yeah. So here, that's what you have right here. This is a bum, 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 sorry. A double bottom with neckline and small break out up pattern right there. Yeah, small neckline. It doesn't break out much, but it does break out a little bit. Yeah. And let me show you if I can show you another one. Basically, yes. Here is basically another one right here. Here's your bottom. Here's your bottom, and here's your neckline right here. So this is a very, very common one. Again, double bottom neckline, and then as you can see, it breaks out going up. So it's the same, another double bottom breakout going up. See if I can get you another one here. Dun, dun, dun. Why do I have it on one day? It's just basically easier that way, and it's easier to see the chart patterns that way. Let's see if I can. Bum, bum, bum. Here's another. For example, here's another bottom right here, bottom right here, and then this is the neckline right there, and it breaks out going up there. Bum, bum, bum. Now let me try to change this and see what happens. I change this to 1 week. Yeah, let's see if we can find some other patterns here. Bum, bum, bum. Oh, here we go. If we move this to 1 week, you can kind of see here. Here's a here's a head. Here's a left shoulder. Here's a right shoulder. So that's why this is the this is basically the neckline right here. That's the neckline right there. And then so here you have what's called. Let me type that for you. This is the head and shoulders. You have the neckline, and you have a just a very small breakout downward. Okay, what do I mean by that? So like right here, if you look right here, just a small breakout downward there, just a small one. Let me see if I can give you some more. Well, I'll give you some more in the next one. Anyway, that's some of the technical analysis. We covered a little bit with the MACD and the RSI. Remember, just because, like, for example, there's a, let me give you the line here, brush. Like, for example, it can go down here a long way before it ever breaks out. Because it can stay overbought or it can stay oversold, or like this, or like that. And this thing can continue to go up, or it can continue to go down. So that's why I say be careful with the RSI. Don't just think of it as overbought or oversold. You have to be able to discern, you know, where it really is. Yes. So, having said that, let's go to some of the more information about IBM shares. Dropped 13.2% on Monday, the largest fall since 2000 due to AI concerns. This decline erased billions from its market value, totaling a 25% drop this year. Okay, so if you're on TradingView, that's just a little bit of a news update. Volume-wise, that's at 19.52 million. One thing I wanted to show you on that, for example, if you look here, when there is more, for example, the volume increases. Like you see right here on the volume bars, that's an increase. That's because there's more price movement. See, it's going down, so there's more volume. Here it's going up, so there's more volume. You see, the green bars represent the volume, and the red bars represent the volume. But if it's, for example, look right here, it's just staying the same. So if you come straight down from that, if it's just staying the same straight down, right here, the bars are not as high. That means there's less volume. Okay, so if there's less volume, that means there's not as much action in the market. Right now the market cap is at 208 billion. Let's go to IBM's, to some of their earnings. So why do we look at earnings? Because we want to know, is the company bringing in money? This might tell you how strong or how weak or how full of life the company might be. So yeah, that's why we're looking at it. So you can look at quarterly, but it's better to look at annually. But quarterly, you can see Q4, Q3, and Q2 all surpassed expectations. Go here to annually, and you'll see that 2025, 2024, and 2023 all as a year, all of them surpassed expectations. Okay, and so that's a good sign. Yeah. Now let's go here to statements. We look at statements. Hit the annual button right there, and let's look at the probably the last 3 years. What's happened the last 3 years? Well, if you look at 2023, 2024, and 2025, all 3 years for revenue, gross profit, operating income, we're all in the green, all doing good, except for operating income on 2025. Otherwise it was all green, all looking good. Now if you look at net income for the last 3 years, net income was good for the last 3 years except for 2024, which was in the red. So that tells you a little bit about, well, how much income is really, how much money they're really making, how much is from revenue, how much is from expenses, stuff like that. Just gives you a little bit of an idea of what's going on in the company. This is not the only information, but this is some important information that's true. Now, if we look over here, if you want to, for fun, you can look at the forecast. That's one of the things that I don't put too much stock into, but it's more for entertainment. 16 analysts offering a 1-year price forecast have a maximum estimate of 390 and a minimum estimate of 218. They do give it a strong rating, but again, who are these analysts? What do they know? Who knows, right? But just showing you that for fun. Now let's go to, for example, this article here talking about Amazon. Amazon is spending $12 billion in Louisiana on AI data centers. Again, these data centers are very interesting because they're so expensive and they're so resource intensive. They're expected to balloon $200 billion this year, more than any other hyperscaler, and that's Amazon. And this is in Louisiana, $12 billion. Look at these photos. Capital expenditure. So I thought it was interesting here that Amazon is investing $200 billion in capex this year, more than any of the other hyperscalers, which combined have forecast nearly $700 billion in 2026 for expenditures. Yes. So let's look at this one. Amazon. Let's go here. Amazon. Amazon. Okay. Yes. Now let's take a look here at Amazon. Remember, look at their RSI. RSI is at 41. Now, just a general idea. Again, these are not sure things, but Generally, once you're in here between the 57 and down here at the 44, this is a very neutral range, what we call consolidation. So what do I mean by that? So this is the range in between 57, 55. Between about 45 to 55 is very, very neutral. So when you see, for example, if the stock, if it's not moving up or moving down much, it's generally because it's like, you see how right about in here, where is it? You see how like basically it stays within this neutral range here, and you see that right here, here it doesn't go up or go down much. It stays the same. It's like a ping pong ball bouncing up and down, right? And that's kind of what I wanted to show you. Remember, these are all just general numbers, and the market can deviate a lot outside these numbers. So that's what I want you to be aware of. Yeah. So right now, if you're looking at Amazon, let's look at here. This is the 1 week. Let's go here to the 1 minute. Yeah. So right now, let's see if I can give you. Yeah. Here, for example, you can kind of see right here. This is a double bottom right here. Here's a bottom. Here's a bottom. Here's the neckline right there, and you can see that with this double bottom, it doesn't really break out much. Let me show you this right here. It doesn't really break out much, but it's a pattern nonetheless. Sometimes these patterns don't break out, so keep that in mind. Let me see if I can show you. This to me looks a little bit like, yeah. For example, let's see. Oh, here's a good one. Here's your, we talked about the head and shoulders. Here's a reverse head. Here's the left shoulder. Here's the right shoulder. And this is kind of like a diagonal neckline right there. So as you're looking at this, you see the diagonal neckline. This is a, and then you can see right here, it breaks out. So you have the reverse head and shoulders with the breakout neckline, as you can see that right there. It's a kind of like a diagonal neckline, yeah. So that's that. Let me see if I can give you something else to look at here. Dun, dun, dun. Bum, bum, bum. Then let's go here to, so we can get some of the bigger bigger charts, patterns with bigger, there you go. Yeah, well, we'll get more on the next one. But yeah, that's a couple basic chart patterns for you right there. Let me see if I can change this to 1 hour. No, don't do that. Go back here to 1 minute. Yeah, there's some of the chart patterns right there. And so basically right here, when you're looking at Amazon, you can see right now the RSI is sitting here right here, about 66. It's not overbought, not even close yet. So this is and if you're looking here, where the heck is why Okay, there's my MACD. So for example, you can see looking at the MACD. Yeah. Boom, boom, boom. So here's the 1 minute. Yeah, this almost looks like a little bit like a reverse head, and you have the left shoulder, you have the right shoulder neckline, and a breakout. So therefore, it goes up right there. Looks a little bit like that. Yeah, there's that. Well, anyway, a couple chart patterns for you. So Michael Burry, this is looking at TradingView. Michael Burry warns that Amazon's rising AI spending may affect its cash flow. Major tech firms are set to boost spending from 381 billion to 2025 to 650 to 700 billion in 2026. That's a lot. So, looking at Amazon's, let's see, right now their volume's at 53.5 million. Remember, as I showed you on the last one, you can see how the volume bars go up when there's more, when there's an increase or decrease. And let's see, yeah. Market cap is at 2.2 trillion. Let's go to their earnings. Earnings wise, again, we'll do quarterly and we'll do yearly, okay? But if you look here at Q4 just missed it barely, or missed the expectations barely. If you go here to Q3 and Q2, both of those quarters surpassed expectations. What expectations? What does that really mean? Well, it's like, for example, Wall Street, their analysts predict or have their expectations of what each stock is going to do or supposed to do. And if it surpasses that, well, then it looks good, looks stronger than it was supposed to be. If it meets that, then I guess it looks okay too. But if it misses the expectations, then oftentimes that looks like didn't do that well. So just a general idea there. Annually, 2025 beat expectations. 2024, 2023, all last 3 years beat expectations. So in that regard, it looks like a very strong company. But let's take a look here at statements. Again, hit the annual button. Last 3 years, if you look at revenue, if you look at gross profit, look at operating income, all of those are all green, looking good. And if you look at the last 3 years, net income, same thing, all green, all looking good. Now let's go here to talk about Amazon. We talked about how, again, Mr. T once is trying to sell the idea that he's trying to get the executives to cover the cost for the data centers, but we'll see about that, right? One thing I wanted to mention was this article here about how SpaceX's mega IPO redraws 2026 roadmap for listing hopefuls. There's always something going on with this guy. He's always interesting. Love him or hate him, he's planning the largest initial public offering for SpaceX. It's great news for existing backers and banks that would reap astronomical fees. Yeah, so let's look at this one. SpaceX could raise as much as $50 billion in a U.S. listing that would potentially lay the foundation for IPOs of artificial intelligence companies Anthropic and OpenAI. So, with Musk's rocket and satellite maker eyeing a June debut, it and other potentially massive deals threaten to dominate investors' attention and pressure companies weighing relatively normal-sized IPOs to work around them. Yes. So this looks good. So I wanted to show you this. Yeah. So what we can do now also is I wanted to show you that, and then I wanted to show you this one right here, where Tesla is suing the state of California's DMV to reverse a ruling that the company engaged in false advertising regarding their FSD, self-driving capabilities. And so, yeah, Tesla's continued success hinges on its ability to deliver cars that are true robo-taxis that are safe to use without human operator or supervisor on board. So Tesla's suing California's Department of Motor Vehicles is reversing a ruling that found that the automakers violated the law by falsely promoting its cars' self-driving capabilities. Whether that's true or not, I don't know. But I just wanted to show you that, and then that's a good excuse to take a look at Tesla also. Tesla. So here we are, Tesla. Tesla's in progress and self-driving tech is under scrutiny as traditional car makers and Chinese EV firms aim to adopt similar features, facing regulatory hurdles and high costs. Yeah, so let's take a look. What's going on here with the charts? Give me some chart patterns here with Tesla. So one thing we look at right here, yeah, again, this is put this down a little bit. Where is it? Right here, yeah. So if you look at this right here is at about the 80 line. So it's very, very overbought, but that doesn't mean it can't continue because, for example, look at this price up here. This can keep going, and what could happen is, where is my brush? Yeah, this can just correct and go like that, and then this could just this part up here could continue to go up. So that's why I say where is it? Don't rely on something. Don't rely on the stock being overbought, because it it can always correct and not the RSI can change and the stock can keep going up. That's what I mean. But let's take a look here. For example, just to show you a couple patterns that you can see. We talked about the MACD. Right here, the MACD crosses right there, and it does go up right, it's going up right here. But that's what I mean. Right here, it goes up, but it should have gone up right here. That's why the MACD sometimes is lagging. It can be helpful, but remember, it's lagging. Looking for chart patterns. Remember, let's see, here's a double bottom. Right here. That's your double bottom. You can kind of see that. Why? Because right here is the bottoms, and then right here is the breakout neckline. Yeah? And then the same thing. This is basically right here. You got basically almost a triple bottom. 1, 2, 3. And then this is the neckline right there. So basically that's a triple bottom, basically similar to a double bottom, but it doesn't break out a whole lot. But that's that. Okay, and also here, let me show you. Right here, yeah. Here's basically a double bottom. It doesn't break out. It's a small pattern, but it doesn't break out much. Right there, right there, double bottom. Let's see what other patterns can I give you really quickly on this one. So we're looking at Tesla on TradingView. For those of you watching and entertaining yourself with this, here's here's a good one. We talked about double bottoms. Here's a good double top right there. Boom, 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 right there. So you have the top, and there's the neckline, and then it breaks the neckline right there. Yes. And let's see, what else can I show you? Oh, here's a nice one. Yeah, a good one. Here is a head. Here's the left shoulder, the right shoulder, and there's the diagonal neckline. So let me highlight that for you right there. Kind of got a head and shoulder, head and shoulder with diagonal neckline, and then downward chart pattern right there. A downward chart pattern right there. So you see that? That's a really good one right there. If you guys have questions, just put the questions in the comments part, or if you're liking what you see, also just put a smiley face or something like that if you generally like this. Let me see if I can give you another quick one right here. Well, let's go on. We've got some new chart patterns there. And and then Tesla. Let's look at Tesla here. Let's go to their fundamentals. Volume wise is at 69.6 million. You can kind of see right here. These are the volume. You see how the volume increases whenever there's more chart. When the price is going up or going down, there's more trading, and then when there's no right here, you see how there's less trading right there, right? And also market cap is at 101.5 trillion. It's a big market cap. Go here to the fundamentals. What do we got here for fundamentals? Quarterly, Q4 of 2025 beat expectations. Q3 missed it. Q2 was equal to expectations. But overall, 2025 equaled expectations, so that was good. 2024 just missed it, and 2023 just beat it. So actually, all 3 years met expectations or higher, except for 2024. So bearing that in mind. Looking at statements, hit that annual button, and if you look at statements, the last 3 years didn't look very good for profit or operating income. The only thing that was good the last 3 years was total revenue in 2023 and 2024, but otherwise total revenue in 2025 was not good. Gross profit, operating income were not good those 3 years. The only year that had a positive net income was 2023. Otherwise, 2024 and 2025 did not have positive net income. So bearing that in mind. And that's again, we're looking at SpaceX there. We're looking at Tesla. Now another one that we can talk about is Home Depot, because Home Depot beat Wall Street's expectations. Yeah, let's take a look at that one. So, looking at this one, Home Depot tops earnings estimates for the first time in a year, as demand for projects remains muted. So, they topped their earnings estimates. They beat their estimates, even though the projects remain, even though they're not having many projects. So that their sales are falling, but it topped Wall Street's earnings and revenue expectations. So there's slow housing turnover and high interest rates have stalled many of the home projects, right? So Home Depot said the company is evaluating the 15% across the board tariffs that Mr. T announced after the Supreme Court struck down many of his important duties. Tuesday posted a roughly, the company also struck by the current the customers have told the company they are concerned about housing affordability and job losses. In a 3-month period, Home Depot's income fell to $2.57 billion, or $2.58 per share, and the revenue dropped from $39.7 billion in the year ago period. So let's check them out. We got Home Depot here. Home Depot. Yeah, here. Okay. Let's take a look. Looking at the RSI right now, the RSI is sitting here at 55. So this is a very neutral, but again, that doesn't mean it can't break out anytime. here's I want to show you this. See, you can go again. This was at 85, and it was at 85 before it ever finally. That's what I mean. It can go very very high before it ever finally corrects. Same thing here. It goes all the way down to 20 before it ever finally corrects. And then right here, you're looking right now at about 376, and right now you see all this volume right here is doing a lot of trading because it was going down, then it's going up, so there's a lot of trading happening. And looking at the MACD, you see the MACD right here, the blue line is crossing the signal line, indication of going up, and then right there it crosses the signal line. It crosses the signal line, indication of going down. Even here, it crosses the signal line going down right there. Right there. So again, the MACD is sometimes lagging, it's sometimes not on time, but it is a helpful tool if you use it the right way. Now let's go into some of the chart patterns here. So here's a good one. So here we got the double bottom right here. There's the neckline breakout. You got a double top right there, double top, and there's the neckline breakout. But it doesn't break out much, as you can see. Sometimes these things they have the chart patterns, but they don't really do the breakout. So there's that. There's that. And let me go on here. Oh, here's a good one right here. You can kind of see this one pretty easily. Here is double bottom, and then right here is the neckline, and then you got the breakout right there. So, so here's your double bottom, neckline, and breakout. That's a nice one right there. Yeah. And let me show you if I can find you a better one. Here's this looks alright. This isn't as clear as it could be, but so here's your neckline. That's your head, and then here's your left, and then here's your right shoulder. So here's your neckline breakout. Reverse head and shoulders, and then there's your breakout right there. Yes. Also, here again is a double bottom with here's your neckline and just a tiny breakout. Again, we could do this all day long. These patterns are fun, right? Let's see. Okay. Oh, here's a good one. Here's your double bottom right here with your neckline, and here's your breakout right there. Yeah, so that's that. Yeah. Let's go ahead and go back. So that's Home Depot. Let's do some of the fundamentals at Home Depot. Home Depot's fourth quarter earnings reached $2.72 per share. Volume wise, they're at 5.5 million. If you look over here, volume wise, right here, 5.2, and the market cap is at 375 billion. So there's that. If you look at the fundamentals, again, you can look at quarterly, but it's better to look at annually. Quarterly, fourth quarter beat the expectations. Q3 though missed expectations. Q2 also just barely missed it. So, but annually, 2024 beat expectations. 2023 also beat expectations, and 2022 actually just beat expectations just barely. So, actually, even though there were a couple bad quarters in there, they year over year they all did pretty well. All three of the last years. So that's the earnings side. Looking at the statement side, if you hit the annual button, because with statements you really want to do annually. But let's see, for the last 3 years, look at 2022, 2023, and 2024. Right, yeah, actually 2022 did great for revenue, profit, and income. 2023 was not good for revenue, profit, and income. Now looking at 2024, revenue and profit were good, but operating income was not. If you go down to net income, the only year that did good was 2022. 2023 and 2024 did not do well. They're both in the red. So that's Home Depot. And for example, we talked about Home Depot. I also want to talk a little bit about AI and robots and how they're going to change our lives. Why am I talking about this? Because Amazon laid off 16,000 employees as the AI battle continues to get bigger and bigger. The company's second round of large-scale job reductions in 3 months, that was 16,000 employees, as it fights to improve its standing in the battle for AI supremacy. Yeah. So, for example, that's what I mean. Like with AI, where I'm not sure where these new jobs are going to be created, and I think there's going to be this next article right here. It talks about how AI robots might outnumber workers in a few decades as firms ramp up investment. Yeah, look at this. That's what I'm saying. Like, there's going to be more AI robots than there are workers. Looking at this one, AI robots will exceed the working population within a few decades as more firms adopt AI agents and continue to squeeze costs. When you marry profitability up with technological progress, we have the biggest trade coming in history, which is basically that artificial intelligence will be able to do more, better, and cheaper, and that'll be a substitute for people. Yes. So basically that means more and more people will lose their jobs. They measured how long it would take for a robot to pay for itself through the money saved by replacing a human worker. So for example, a $15,000 robot would break even in 3.8 weeks for a $41 an hour human job, or 21.6 weeks for a $7.25 human job. Meanwhile, a robot that costs $35,000 would have a payback time of 8.9 weeks for a $41 an hour human job. So, you can already buy a humanoid today, which gives you a payback period versus human workers of less than 10 weeks. 80% of leaders expect AI agents to be largely integrated into their AI strategy within the next 12 to 18 months. Yes. So again, that's why we're looking at this one. Everyone's laying off people for AI, and then here they're talking about robots taking over. So let's do this one. Fears around AI replacing workers have mounted in the past year as major firms, including Amazon, Salesforce, Accenture, and Heineken and Lufthansa, have cited the technology as part of the reason for eliminating thousands of roles. So yeah, let's do that. Let's take a look here at, we did Amazon already, Home Depot. There's many more. But NVIDIA has a different tone. NVIDIA talks about how they predict an AI boom will create six-figure salaries for the workers building AI and chip factories. So for plumbers, electricians, construction, and steel workers, because they have to build these AI chip factories, they'll need those kind of people. Well, let's see. See what happens. Let's take a look at NVIDIA right here. If we go back here to the charts, NVIDIA right there. Okay, remember we talked about this, the RSI. Again, don't pay too much attention to these lines. They're just there as a guide, but they can go way up higher and way lower. So again, those are just guides. Right now, it's sitting at about 65, 66. which is not very high. And you can see that right here the MACD line crossed the signal line right there, going as it goes up, and here as it went down, it crossed the signal line going down right there. Yeah, so bearing that in mind, you have basically looks like right here you have here's your double bottom, kind of not exactly a double bottom, but and then there's your breakout line, so it's going to go up right there. Also here you have another double bottom right there, and here's your breakout line right there, bum, bum, bum. Right there, yes. Oh, here's a good one I can show you. Bum, bum, bum. Yeah, for example, if you look right here, it's easier to see the pattern sometimes when you zoom out a little bit. But yeah, so there's the neckline, there's the bottom, there's the bottom right there, another double bottom, and then yeah, here it's a little bit hard to see, but there's a little shoulder right here, and here's your left shoulder, here's reverse head, and then bum bum bum, reverse head and shoulders, and you get the breakout going up. And then here you have the head. Oh, this is a good one. You have the head, and here's the left, here's the right, and you have the head and shoulder breakout. Then you have the downward pattern. So you have right here you have both head and shoulders, and a reverse head and shoulders right there. Yeah, head and shoulders and reverse head and shoulders right there. Both of them right there. And then here, basically you can kind of see the patterns. This is kind of cool. 1, 2, 3. Basically a triple bottom right there, and then it goes up right there. So yeah, some nice patterns right there. Very lovely patterns. Yep, wonderful. Yeah, and here I got it on 1 minute because it's easier to see the patterns that way sometimes on 1 minute. Here's your double top, and then here's your neckline right there, and then there's your breakout right there. Good. And let's see. Let's do some fundamentals on NVIDIA. NVIDIA will release Q4 earnings report after the market closes on Wednesday. There we go. And then volume-wise, let's see if we go back here. Yeah, you can see how the volume bars are getting bigger because there's more trading volume here. Volume is at 171.5 million. Market cap is at 4.6 trillion. Let's go to the earnings side of it. Looking at the earnings, quarterly Q3 beat expectations, Q2 also, in Q1 also. So all 3 quarters of 2025 beat expectations. 2024 as a year beat the expectations. 2023 as a year beat the expectations, and then 2022 as a year met the expectations. Okay, so that's the earnings side. Now let's take a look at the statements. Click the annual button right there. Now what's the annual side looking like? Annually, 2024, if you look at the revenue, profit, and operating income for 2024 and 2023, both of those years were very good as far as revenue, gross profit, operating income, and net income. Now, 2022, total revenue was good, but nothing else was. Net income was bad, so was the operating income, and so was the gross profit. But the last 2 years, 2023 and 2024, were very good in the green for NVIDIA. Yeah, so, having said that, if you guys have questions or comments, or if there's anything you're liking or disliking, just please put that in the comments. Yeah. And then, yeah, all of you that made a comment or gave a question, I thank you very much for that. Hope it's been interesting for you. And having said that, see you next time.
We have got to the point